Hey everybody, Frank Chen here with REIClub.com, the only site you'll need as a real estate investor. Today's quick video, we're going to talk about the pros and cons of protecting your real estate business using an LLC. Now, when you're deciding to select an entity, you really have to figure out which one is going to protect your assets the best, save you the most on taxes, and help audit-proof your IRS returns. Now, LLCs embody all three of these to a good degree and are usually a good choice for most investors. Now, note that I said most and not all. Okay, now what I want to talk about first are the pros of using an LLC. Now, LLCs are known for creating limited personal liability. Okay, and LLCs actually have characteristics very similar to a corporation and a partnership. Okay, on the corporation side, it divides a line between the business and the owners, and on the partnership side, it actually allows more flexibility between the members. Now, LLCs also have a really cool 1040 flow-through tax benefit, which basically means you can avoid paying both corporate and personal taxes. This is what we call double taxation. Now, LLCs also have no limitation on the number of members, and there are some entities out there that have a cap at 75 members or less. LLCs can do 75 or more, okay? Now, you can also protect multiple real estate investments under one LLC if set up correctly. I know some of you out there have been told that you should get one LLC per property, but that's really just additional paperwork for you. There are ways of doing it correctly where you can have multiple under one, okay? There's also a thing you can do called equity stripping with LLCs, where you use another LLC you have to create liens on a property that have equity, and it actually potentially hides that equity, okay? Now, it's also cheaper to file an LLC than incorporating, and it's much less paperwork than a corporation, okay? You can also avoid transfer tax, which means when you have a property transfer from one owner to other, there is transfer tax, but if the property is under an LLC and the LLC is transferred from owner to owner, there is no tax, okay? Now, also, if you set up your LLC correctly, you can actually deduct the home study courses you've bought for the year, seminars, and travel and other expenses, okay, at the time after the formation of your LLC. The next thing I want to talk about, guys, is the cons of using an LLC. First, you have to create a separate account for this entity, okay? Which means you have an additional account that you have to manage, and if you have an accountant, you might have to pay them a little bit more at the end of the year. I've also been told it's harder to qualify for loans for properties under an LLC, and in some states, evictions must go through a lawyer. You also have to pay self-employment tax when you have an LLC, and some states actually have franchise tax for getting the benefits for your LLC, okay? Now, one of the things I really want to emphasize are some helpful tips, and when you're actually starting out and creating an LLC, when you're filing your articles of organization, okay, for some states, you're actually able to use a nominee member or organizer, okay? This could be a friend, a coworker, a partner, and after the formation of the entity, the nominee will resign, okay? And then you and other real members are elected. Now, this is the way to kind of remove yourself from the public records so that it's harder for people to find you. Now, do me a favor, be sure to, run this by a real estate attorney just to confirm this is a process. Remember, this happens in some states, not all. Now, the next thing I want to talk about is some investors suggest not creating a single member LLC. And the reason why is because your entity veil is going to be more vulnerable at that point. So it's going to be easier for people to expose your personal assets. There also is no charging order protection in most states, and then you're at higher risk for IRS auditing, okay? So once again, if you're filing as a single member, these are the possibilities. But once again, guys, be sure to check with your real estate attorney. And of course, the last thing is a tip I picked up this rather recently from a guy who had 25 years in wealth protection is avoid basic setup. A lot of investors simply find a name, file their LLC, and leave it at that. They don't really do their due diligence and really just make their LLC ironclad to fully protect them for that year. Now, you guys understand that LLCs have many tax and legal advantages, but it's incredibly important that you consult with your real estate attorneys, guys, to make sure that your LLC is not only a good fit for you, but for the type of real estate business that you're trying to run. Okay? Now, guys, I hope this video gave you a better perspective of what LLCs are like, the pros, the cons, and some helpful tips. Do me a favor, leave some comments below about what you thought about the video. Also, click the like button because it really does help us out. But most importantly, subscribe to our YouTube channel so we can keep you informed when brand new videos are posted every week. As usual, guys, thank you so much for your time. I look forward to talking to you next week. Take care, good investing, and bye-bye.